most important part about the stock market is you cannot buy a stock just when the economy recovers, right? Stock market move 6 to 9 months ahead of the economy, right? So we need to look at the 6 to 9 months ahead, what's whether the economy is high chance to recover, then we will go into those sectors right now.
Hi everyone, welcome back to the 3-minute video series. And this week we have Kathlyn herself to answer your question. And the question we have picked is from Dave Ng. He was asking, what do you think of the US market in the next 3 months? Now this kind of question is general and we're not sure of your context, right? Are you asking because you want to get in to the US market, or are you asking because you have positions and you're concerned? So we're not sure, but we'll do our best to answer it and give you a full context. So over to you, Kathlyn.
All right, thanks, Terence. Okay, for the next 3 months, it means around November all the way to January. It's typically a seasonally bullish period, right, based on historical statistics. And this is a typical year-end rally period. Okay? However, right, there are also warning signs of potential increase in COVID cases, potentially during the winter season, which is a typical flu season as well. There's a warning from the US Federal Reserve as well as from UK. In fact, based on the COVID cases chart, it has already shown new spikes in the new COVID cases in UK. But for the other countries, it is still okay. Right? So this is something that we need to continue to monitor to see how bad it is. So what is the impact, right? If the COVID case spike, it will delay the recovery of the travel-related stocks. Right? So it depends on which sectors you are focusing on for your investment and trading. Okay? Of course, there will be other resilient sectors like technology, but they are more overvalued right now. So you need to be very selective on those that has not run off too far. There are 4 main risks to the stock market in the next 1 year. The first one is money supply. Okay, so related to money supply, the Federal Reserve has already made decisions to stop the tapering by middle of next year. So in simple layman terms, tapering means stopping new money supply, right? Printing new money to the market, like stop issuing new bonds, right? So this is already expected, so it's not a surprise to the market. The second one is on interest rate hike. Which is also a major concern because increased interest rate, especially as a fast pace or too early, can impact the stock market. Right? So the good news is the US and European Central Bank has mentioned that there's no hurry to raise interest rate. So this actually is the concern for the market, at least for the next 1 to 2 quarters. It should not be a big problem. So from my personal perspective, I think the interest rate hike most likely is going to happen only in Q3 next year. Okay. The main reason is unlikely they will do 2 things at the same time, stopping money supply and raising interest rate. That would be too aggressive. Right? The next concern is actually, the third concern is on potential tax hike. So in terms of potential tax hike, the reason for the tax hike is to fund the stimulus bill from Joe Biden. And there was a lot of objection from the Republican. And due to this, recently the tax hike increase is not going to be that significant, right? So since it's not so significant, that's not going to be a very big concern. So it does reduce some of the bullishness, but it's not going to cause a big downtrend just because of that. And the fourth major risk is on the supply chain constraint, which we are already experiencing right now, right? From many perspectives, right? One of it is the semiconductor. We also have supply chain constraint in terms of even the apparel goods because of some of the factories are not opening up totally yet. But this supply chain constraint is going to be temporary because of a supply and demand imbalance. So based on all projection, the supply constraint may ease towards the end of next year. Okay, so this is more temporary. So these are the 4 main risks, right? What are the opportunities, right? The opportunities are more on when the market open up, right? Then people will start to travel, then the consumer spending will go up. And the most important part about the stock market is you cannot buy a stock just when the economy recovers, right? Stock market move 6 to 9 months ahead of the economy. Right, so we need to look at the 6 to 9 months ahead, what's whether the economy is high chance to recover, then we will go into those sectors right now. Okay, so that's what I assess for the next 3 months. So in simple essence, the condition for the next 3 months is still good, but you have to be very selective on the sectors to invest or trade in.
All right, so that was the answer to your question, Dave. What do we think of the US stock market in the next 3 months? Now, the rest of you, do you have questions about the stock market? Feel free to post it in the comment below, and we will pick and answer the best questions in the next video. See you in the next one.